Good evening, ladies and gentlemen. Hope you all are doing well. Welcome back to another episode of the Aerial Effects Smart Money Sundays series. We will be going over all the pairs in red here. There is quite a few of them, and what's quite interesting about this week is that the higher and lower time frames are not in conjunction with one another. I've been saying that over the past couple of weeks. We are starting to see these higher time frame shifts in direction. So these lower time frames are really not following the higher time frame, but that is okay. We can still be trading and hedging our positions as we go. So for instance, what I'll probably be talking about a lot throughout this video is hedging. Okay, so when the higher and lower time frames are in conjunction with one another, let's just say that we're in a higher time frame downtrend. That means higher time frame we're bearish and lower time frame trend we're bearish as well. So it makes for very easy setups, and we don't have to hedge because there's no trend that's actually going bullish. So in this case, we are still higher time frame bearish. As we can see, we have lower lows and lower highs. This was our most recent lower low, our pullback to our lower high, our lower low, and then we can see in here that we broke the counter trend structure on the lower time frame, and now we're starting to make higher highs and higher lows. Even though this is still an overall higher time frame pullback for an expansion, this is still a higher time frame pullback for a potential expansion. So understanding that we're higher time frame bearish, but in this case, we are lower time frame bullish, it makes for a little tricky situation. So what we can do here is we can hedge our positions as long as we have good risk to reward. Now, I don't want you guys to be scared of taking these trades. Now, not these trades in particular. Now, if you want to take them, you're more than welcome to. They are not signals. This is just analysis. So please, do your own due diligence. Losing or winning a trade is totally on you, your responsibility. However, I am here to give you potentially a good bias for the week and, areas of interest that you can be looking out for. So in order to properly hedge, in this case, I hedge when the lower time frames are not in conjunction or in alignment with the higher time frames. So with hedging, we need good risk to rewards. Now we can see here that we are currently in sells from these three levels of supply. Now we've talked about these throughout our VIP channel for the past couple of weeks. There's a lower time frame supply here. Really, this is our last point of return. If we come higher than this high, we're most likely going to be breaking structure because that is the end of this pullback, as we can see in here. All right, looking to make a lower low all the way down. Currently, we are counter trend bullish, so I really don't want to come above this high. At that point, we would be breaking structure, and we don't want to see that. However, we are still counter trend bullish. So is it possible for us to continue with the lower time frame trend and make a higher time frame pullback? Because we can see higher time frame, this may just be one expansion for a pullback for maybe another expansion on the higher time frames. That's why we see higher and lower time frame pullbacks, right? A higher time frame pullback is a lower time frame trend, right? Vice versa, a lower time frame pullback is even a lower time frame trend. Right, so everything has its own trend and pullback phase. This is why we have to understand multi-time frame analysis. It is so very important. So for instance, let's just say that we are selling from these three levels here. So I'll pull my risk to reward tool for these three trades. I'm actually just going to do it for the lowest one right here to show you probably the lowest risk to reward I have. Obviously, if I push one up here, it'll be a higher risk to reward, but I'm just going to be fair here and show you even what the lowest risk to reward on this trade would give me. So I'm targeting 0.600, higher time frame objective. Okay, so right about there. So it's a 1 to 5. Even with that, it's a 1 to 5. I could do the same thing here and probably have like a 1 to 15, but obviously I'm going to make it very fair. So even with this is just a 1 to 12, but I'm just going to say this is a 1 to 5, right? And this is a 1 to 5. So if I have a 1 to 5, right? And then I look to hedge my positions long here. Let's just say right in there. And I look to put my stop loss maybe right below the swing point, which is right about there. So let's say 70 pips. I'm just going to make it even. And then I look to target higher time frame pullback regions, right? So maybe back up into our most recent supply, right? This is our last pullback on the higher time frame. This was that region of supply right in there. So I'm going to pull my my risk to reward tool, all the way back up into here. And let's call it 6, 7, right? That's a good psychological level right there. That's a 1 to 5 as well. So if I lose this trade right here, if price comes all the way down and makes that lower low, I win a 1 to 5. Then I would lose this trade and maybe this trade here if I place these two positions. So let's just say I did 1% and 1%. Now you can do a 0.5% and a 0.5%, whatever you want to do, but let's just call it 1 to 1, right? Let's just make it easy like that. I personally would do a 0.5%, but let's just say some of you would do 1%. So you lose one here, you lose one here. That's you minus 2% there, because you're trying to hedge just in case it does go long, since we're still counter trend bullish. But it rolls all the way back over. You make a 1 to 5, not even to mention the other two positions with this black line and this one. But let's just say you were just entering here, 1 to 5, minus 1, it's a 1 to 3. You still make 3%. Now let's just say here, right, you win this trade and you lose this one. Okay, let's just say you lose all three of them, and I would put 1/3% risk here, third here, a third here. But let's just say, you guys, some of you may over leverage and place 1% on each. So that's 3% total. You risk 1% here. Still, 5 minus 3 is still 2%. You are still netting positive on your trade, right? So following multi-time frame structure, understanding what structure you're in, higher and lower time frame, and following the proper supply and demand levels with the correct institutional concepts for your trades that you're entering, you are most likely to net profit on hedged positions in total, on the aggregate position. That is why it is okay. So I will be looking to buy at this level here and this level here. If it goes short, oh well, I'm in these couple of positions and I make a profit. I don't need to make money on every single trade. If my net aggregate positions end up being in a profit, great. I secure that profit and I move on to the next pair or the next setup. Right, that's how we have to treat trading. We have to treat it like a business and not like a little hobby that we have to make 100% return on or hit 100% win rate, when that's just not professional and not sustainable. All right, so let's go to our lower time frame. Where are we currently on even like the 1 hour, the 15-minute trend? We're making lower lows, lower highs here. So we have reacted from these levels of interest, right? So we've reacted from them and we are starting to shift structure to the downside. We're still counter trend bullish, so we need to be kind of looking for buys. So I will be hedging at this level, stops below here, hedging at this level, stops below here. Okay. Now I will be looking to sell if we get back up into our most recent supply level. So these tan or orange boxes that I'm going to go over throughout all of this will be areas I'm looking to take trades from. So that I am looking to hedge my position short. So I am still looking to short here. I'm still in shorts all in here, those three positions. So overall, I'm net positive on this, but I'm looking to add to it. Okay, obviously using a lower lot size or lower risk, lower percent risk. That's what I mean. Okay, so looking to sell from here, looking to buy from here. If it pushes through, I lose. Great, I win this one. I win these. If I win, if just in case we continue with the counter trend, then and we break structure, higher time frame, fine, I lose these, but at least I'm making money with these, and I can hedge my positions appropriately. You don't always want to hedge your positions. If we are higher time frame bearish, let's just say that we are making lower lows and lower highs, right? And then all of a sudden we come up into supply, we break structure, boom, right back to the downside. We don't need to be looking for buys anymore. If we're higher time frame bearish, we're probably going to make a lower low. If we're lower time frame bearish, we're probably going to make a lower low. Right? So we don't need to hedge. We only hedge when higher and lower time frames are not in conjunction with one another. Just in case we catch the opposite direction of trend, we can be confident that if we hedge, we'll probably end up with the right direction with some sort of trade. All right, so that's only if we get appropriate positions. This is an appropriate level of demand in balance fill within the current trend. This is an appropriate institutional sponsored move. Sell to buy, made a higher high, broke the structure, took liquidity. Imbalance fill. So these are proper levels. We have to be trading off of proper levels first and foremost. So that is AUD USD. That's what I'm looking for. CAD Swiss franc. So last week we created a huge institutionally sponsored selling move, right? We had this huge selling volume that came with the news. So what is the news in this case? The news is just used as an excuse to push price in its overall direction, take liquidity, mitigate, fill imbalance, do whatever, right? And it's going to do what it's always meant to do. That is why trading news in and of itself or by itself is just not smart, because regardless of the news, if someone is just placing a buy order right in here, right, they buy it, then price sells off, they lost. But in all reality, I'm buying from here because that's a real level, and I would have bought it here anyways, right? So in this case, price came down here. It was used as the catalyst or as, an excuse to inject volatility short, to sweep these equal lows, to fill all this imbalance, to come down into the most recent demand, and then go long. That's what the catalyst was for. It was just used as an excuse to manipulate price. That's what news is. Okay. So we can see higher time frame. We're currently in this 1 hour, 4 hour, 15-minute current uptrend. Higher time frame, we're in an overall downtrend, low, high, low, high, low. Looking to take out overall lower lows, in equal lows, sell side liquidity, but at least pull back up into higher time frame supply first, 7-4 psychological level. So I think we're going to come back up into that level first before potentially shorting off, right? So on the lower time frame, we're looking for continuations. Okay, so right in here, we had that area of demand. We came into it. We pushed back up. We had the sell to buy, swept liquidity, chop, 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 failed to make a lower low because you can classify this as the counter trend. Low, high, low, high. We failed to make a lower low and made the higher high. Now we're starting to push higher. So we want to pull back, sweeping all this sell side liquidity and coming into this level of demand in here for long. So that's where I'm going to be looking to buy CAD Chef this week. Euro GBP looking for overall sells into higher time frame objective, at least into 85115 or 85 psychological level. So we have a lower time frame and a higher time frame area of interest. The lower time frame area of interest is just right upon this current swing, right? 1 hour time frame, 1 hour 50 EMA is approaching imbalance in here. The selling candle, we have this area of supply in here that came up into this supply, that came up into this supply and filled imbalance, as you can see. So just continuations with the overall lower time frame trend into 0.85. If we get a break and we come higher, then we're going to have most likely an overall pullback, and I would expect probably our original level, and it happened to be on the hourly as well, this area of supply to be met. We can see lower low, lower high, lower low. Okay, so right now, yes, we have made a lower low, but this is still an unmitigated level of supply. So we could come back up here, act as buy side liquidity, run these highs, and then go short after we hit 881. So we can see here we swept a lot of descending liquidity, huge buy to sell, failed to generate a higher high, then we made the lower low, creating that supply there. So I'm going to go to the higher time frame so you can see I would like a sell from either that region down into here, or an overall pullback from this region down into here, or a deeper pullback back into our overall level of supply. It looks better on the hourly time frame, but I'm just zoomed out back into 8-9, and then overall sells into that level. So overall, looking for shorts. Pound is still strong, looking for pound buys at the moment. So looking for EG sells, just looking for different levels. And we can see here that if we go to the hourly time frame, even if I pull my handy dandy fib I keep saying fib, I don't know why. Risk to reward tool. In this case, this isn't the best risk to reward. So we can see here, this would only be about, let's call it a 1 to 2.6, right? So if I lose this trade, then I wait for this one. If I win that trade, then great. I will win, in this case, if I put my stop above this high here, take profits all the way back down, I will win 5.4%. Minus 1%, that's 4.4%. Still net profitable. And if I lose this one and this one, it comes up to this one, I'll probably win, again, a decent risk to reward here and still be net profitable overall, right? You can just see that. But you might be asking, okay, well, what happens if we just break to the upside? Well, in that case, we just have to take it on the chin and lose, okay? In that case, we will just lose. And it happens sometimes, but the probability of us going long from a random level without coming into an objective region is very slim, which is why I'm willing to take risk at these positions. Even though I could lose this one, and lose this one if price just moons to the upside, fine, I'll lose it and then move on to the next trade. In that case, I will end up with an aggregate loss for my positions, but at least I have a high probable chance, a very high probable chance that we'll come up into either this level here, or this level here and have a short off into 8.5. Okay, that is my analysis. Obviously, it doesn't mean it's going to come true, but that is what I believe will happen. So I'm willing to take risk at these levels, okay? And we're not always going to win every single trade, guys. So that's why we are long-term profitable. Aerial FX has been long-term profitable for 3 years now since we started. We have aggregated a net profit from the market. Yes, we will lose some days. We will lose some weeks. Sometimes we may even have a very bad month. But overall, if you stick with every single piece of analysis we send out, every trade you follow along with, if you just take it as a signal, or you compare it with your own analysis, you will see the consistency over a long period of time, right? You'll net profit over time. So this is Euro GBP, Euro JPY. I don't see anything currently right now. If we get our higher time frame pullback back down into an area of demand, back down into these two levels of demand here, we can see we're still very much bullish. High, low, high. We can either go for a low, for another higher high into 150, or we can continue with the lower time frame trend, which is right here, into this level of demand. Sweep sell side liquidity right here and then go long. So either one of these three levels looking to buy price. Okay, I've already talked about that plenty of times. Euro USD, same sort of deal here, right? So we are looking for counter trend longs, but overall short. So we are currently short from the market 10060. And I said, guys, we originally sold it last week from here. We sold it last week from here. We were in a little bit of profit, but it respected the counter trend and went long. And we took out this high. Doesn't mean we're overall bullish, just means we're having a deeper retracement. Why is this break of structure here not considered an actual break of structure and just an overall pullback? Because this was the high that created this low. So this is the range. This is just in the middle of the range. We can do this all day long in the middle of the range. That's just a pullback. We can make higher highs and higher lows. Doesn't mean we're breaking structure going long, just means we're seeing deeper retracements. So that's exactly what we're seeing here. This is just an overall retracement in my opinion, because the dollar is still higher time frame bullish. So we've come into our overall level, stops are above the high. We may have one more sweep, and that would just be on the lower time frames back up into the last sort of supply region, buy to sell before going short, filling up some more imbalance. So we could have one more sweep of this high here, come up into that level and go short. Stops are still above the high here. However, if we are to go long, we can be hedging our positions. Counter trend, we're making higher highs and higher lows. Look, high, this is our high, this is our low, this is our high. This could be our low here or here for another higher high. So continuing to buy or hedging our positions whilst we're selling, we can be profiting overall most likely. So we can see here, sell to buy, swept liquidity, head and shoulders pattern, trend line, fake out of the trend line, sell to buy, higher high was formed, created that demand, created demand down there with that sell to buy. Created the higher high, so lower time frame could come back down into 9.9, also a psychological level, filling up imbalance coming into this demand here to go long, or if we have a deeper retracement back down into 97775 into where we faked out from this overall head and shoulders pattern back down into there for long. So either way, we can be looking to hedge our positions long with our overall shorts from this level here. Now, if price comes back up into this region, I'm not going to sell it again. I'm just going to be patient, but I'm saying we didn't quite hit this region of price. We sold it from here with the gap fill with the last buy to sell higher time frame, but there is just a lower time frame supply. I wouldn't look to sell it here again since I'm already in shorts from this level, but if it comes up, that's a possibility. I'll just be waiting and stops will still be above the overall swing point, okay? So that's what I'm looking for on Euro USD. So go back and make sure you have all of these levels. Euro CAD. Okay, so we are coming into a high. Well, actually, we did react off of a higher time frame level. We came up into our last point of supply, right? And I'm just going to go through this quickly. Equal highs, huge buy to sell, came into a lower time frame supply. Failed to create a higher high with that, push to the upside, made the lower low, pulled back, mitigated that supply right in there, created a new supply, chop, 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 lower low again, pulled back, overall pullback into that supply region, and now we're looking to make an overall lower low to go short. This is our last point of return. If we come higher than this level, we're going to be bullish, and then we can be looking for longs. But until then, we're still bearish. So we need to be continuing to look for shorts in the market. Okay, so lower time frame, we are still counter trend bullish at this current time. So I'm just waiting. I am in position short from this blue box from in here. I'm still in a little bit of profit at the moment, but we'll just have to see. We're still counter trend bullish at the moment, so we could possibly be looking for buys. However, where I would look for buys would be in here. This is our only level because this demand already was mitigated by that wick, and then this sell to buy was already mitigated with this demand, right? So this demand was already filled last week, so there's nothing to play off of long as of right now. So we're still holding our shorts, and what we're going to be doing is just kind of waiting for maybe a push back up into here. I'm not going to be selling here because I've already sold from here, right? Stops above this high, but that could be that lower time frame region in which it pushes up, fails to generate a higher high and makes a lower low. And that's where we would create a new supply and we can pull back to short and continue with the higher time frame trend, which is right here. Boom, boom, boom. And the lower time frame trend. Boom, 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 boom. Like that. That way, lower and higher time frame structure would be in alignment. As of right now, I don't really see anything on this pair, waiting for more price action. GBP NZD looks really good. So GBP NZD last week, we were looking for overall longs from this level here. So the reason why this is demand. Now pause the video and ask yourself why this is demand. Okay, why is that demand there? Okay, do a little bit of a top down for yourself. Why is that demand? All right, it's best for you to pause the video as you go through, and before I go over the analysis, look at the point of interest and kind of figure out why I'm looking for that region. That's what's going to help you learn. Because if you're just taking these as signals or just as handouts, you're never going to be profitable, and you might as well stop this video, just to be quite honest with you, right? That's just through experience, through really how the world works and how trading works, to be quite honest with you. So the only way you're really going to be profitable is if you learn this yourself, get the help that you need, and practice. So pause the video. Every single piece of analysis that I do, pause the video before me going into it to see what you think I'm going to be talking about. And if I end up talking about that, that means you're on the right track. That means you're doing something right and you're looking at the right things. Okay. And if not, then you can go back and see what I'm looking for and then kind of see where you went wrong and then kind of learn from that. All right, guys, I'm only here to help you. All right. So higher time frame, let's take a look at that. Okay. We have failed to create a lower low in the market, right? We can see lower low, lower high, lower low, lower high, lower low, lower high. We failed to push down and make a lower low. We made a higher high. So this turns into demand. That is our higher time frame region. We are looking to buy from that level. However, until we hit that region of price, we're still, I wouldn't say counter trend. We're still lower time frame trend, bullish, high, low, looking for a higher high. So we can see the swing points. This demand came into this demand. This demand came into this demand. So now within this counter trend here where we broke structure, low, high, low, high, low, high, low, high, low, high, failed to make a lower low, stopped, higher high, broke the counter trend. This turns into demand now. So we came back down, had a wick entry this past week, swept sell side liquidity. Now we made a higher high in comparison to this high, which was buy side liquidity, which we ran, gave us more conviction for longs. And now we can see the liquidity that was swept and how it was swept. I'm just going to get rid of all this analysis. We can see that this was the selling volume that swept liquidity that came into this level here. Okay. Sell to buy. So on the 4-hour time frame, we can see that beautiful sponsored candle. Sell to buy. So that's where we're going to be looking along 1.985750 this week. Okay, looking for additional positions from our original wick entry there. All right, next one, GBP USD. So pound is still strong, even though we're looking for overall strength in the dollar. However, the dollar could continue to weaken, and we can see pound US dollar go long. That's definitely a possibility. So currently right now, we have multiple levels of interest. I'm not going to be looking to sell here just because that's not really a level of supply, just, kind of a lower time frame level, but not something that I'm really interested in. But continuations to the upside are definitely expected. We failed to come into our original levels of demand, so if we get an overall pullback, maybe that could be the case, but I don't think that's going to happen this week. What I'm thinking could happen is, we just continue with the lower time frame trend. We can see a high, a low, and a high. So this could be classified as one trend. Boom, 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 boom. Something like this. If we get back down into deeper demand in there, this is exactly where we filled imbalance. That's where we came into it, faked out of the head and shoulders as we created there, right? We had that sell to buy, failed to make a lower low, higher high. You can see that doji candle that did that. That's what created the new demand, right? And now we have sell side liquidity resting below this level here. So we could come all the way back down, take sell side liquidity, come into this level of demand, and then go long. That's definitely a possibility. But what if we continue with the lower time frame trend? Maybe like right here, high, low, high. We could come into this level, fill 50% of the imbalance or something like that, 1.14, it's a psychological level, and then go long again. So those two levels of imbalance and demand, we could definitely look for longs from. That's what I'm looking for on GBP USD to keep up with pound strength and to possibly see some hedging on the dollar, maybe some further dollar weakness. All right, same sort of deal with NZD USD. We have broken counter trend, right? We have been trading short within here the entire time, trading bearish sell positions, and we were making a ton of money. We had a phenomenal position. The most recent position was right in here. We came into some sort of supply level on the lower time frame, like right at like 6160, I think it's what it was. If I just push that all the way down, yeah, it was right there. And we had a beautiful wick entry and then a phenomenal return. And we kept selling because the higher time frame, lower low, lower high, lower low, is in conjunction with the lower time frame, lower lows and lower highs all the way down. So we knew that we were most likely going to have the best probability of going short. But now we're looking at breaks of structure, lower low, lower high, lower low, oh, higher high. We have closed above that region. So we have a potential of pulling back higher time frame. However, we still are higher time frame bearish. So this is where it just gets a little tricky. We have to continue to trade with the trend until it breaks. Now it has broken, so we could potentially look to buy it. So 3 levels I have, they're all kind of relatively lower time frame. Imbalance here, just in case we sweep sell side, have a small retracement and continue. If we have a bigger retracement back down into this level of demand, then we could see that. If we have an overall pullback, oops, excuse me, had to burp. Overall pullback back down into where we swept liquidity, sell to buy, made a higher high from that level, took sell side liquidity, came into demand, filled the imbalance as well. That's another level in which we can look for long. So those 3 levels, 577, 57233, 5650. Please mark those levels off. That is NZD USD. So if we see further dollar shorts, that could easily be the case for USD CAD. So we could come short on USD CAD as well. Daily time frame, we had a massive right in here, quick buy to sell. That came into a higher time frame level of supply. This is supply up in here. Even though on the weekly time frame, as you'll notice, we're still bullish, right? We're still making higher highs and higher lows. We could have a higher high form. We have these relatively equal highs in here. We could easily run that. But we came into a higher time frame level of supply. We could have an overall pullback. Still maybe maintain bullish structure here, right? Because this is our last point of demand right in there with that red candle. So we could have a lower time frame trend to the downside or a higher time frame pullback for maybe a potential continuation. But we haven't seen that yet. We were seeing the reaction from this level, so we can be looking for possible shorts. That would be that overall objective. So we'll be looking to take profit at that level for shorts, right? So scaling into this level, I'm actually going to mark this off. I'm going to keep this here. I'm going to make this a perfect price. So the high in there is 32087. We're actually just going to say 321. That's the psych level nearest to that level. So we're going to scale in, and we're going to see that until we come down to 321, we are still counter trend bearish. So that's our overall objective, and that gives us conviction for shorts into that level. So we can see that was our higher time frame demand or supply, as I just went over, and it was a huge manipulation. Look at how small these candles are. Just choppy, 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 choppy. Then right when we get into this level, right before, huge bullish push, huge bearish push. That is manipulation. So we push down, we push back up, we fail to make a higher high, and we make a lower low. So now we're kind of in this downtrend. An objective would be 321 right down in here. So we're still bearish until we at least hit this objective. That is why higher time frame objectives are so important, guys. How do you know that we're not going long now? I mean, sure, if the market does, great. But if we're on a downtrend and we're looking to continue to sell, where do we stop selling? Where do we take profit? This is where you need to understand objective points. Objective points are so important because we need to understand where to take profit and then where to potentially turn around and then look for an additional position or a higher time frame position, maybe back in this case to the upside. So it doesn't mean I'm going to be buying it here. I'm just going to be seeing potential, maybe accumulation in here, maybe changes of structure up in here for potential longs. Then we can be looking for longs in this region of price. Doesn't mean we're just going to be placing a buy limit right there. Just means that we know that's objective, and we know that if we have a buy opportunity surrounding this level, then it could possibly work out, right? Because it's a higher time frame level. So now let's scale in. 1 hour time frame, just continuing with the lower time frame trend. Equal highs were run, buy to sell. We never pulled back up into that lower time frame supply, so that's always a possibility back up into there for shorts. But the lower time frame trend would say lower low, lower high, lower low. Could be a lower high, come back up into this supply, and then short off again. So either one of these 2 levels are valid for me. It would also sweep all of this liquidity that's resting above there. Buy side liquidity, buy to sell would be very nice to see. All right, so what else could we be able to take advantage of? Well, where's the counter trend here? High, low, high. Let's say we do this. Let's say we go like that, we go like this, we go like this, and we go like this. What would that tell me? Reaction from this level, imbalance fill, buy side liquidity taken, higher high, higher low, failure to make a higher high, lower low. That would turn into supply. We could add an additional position there. You guys can see how I'm taking advantage of these lower time frame trends. What if price continues higher? Well, we have a higher time frame level there. What if it continues higher there? Then we know that the trend is still continuing to be bullish as we have a higher high, higher low, higher high. As of right now, a higher low. If we make a higher high and we break this counter trend structure, right, really right in here, then we can be looking for overall pullbacks to then long it again. And that's how we can continue with the overall bullish structure. And then we just be looking for buy setups. And then those setups will produce a risk to reward that would take way more of our wins that would overpower any losses. We could lose once, twice. Let's say that's 2%. Do you think that if we look to buy it somewhere down in here, if price breaks structure, that we would at least get a 1 to 2 to the upside to break even on these sells that we lost from? Absolutely. So that is why it's okay to place positions. Obviously, you can't overtrade in the sense you can't just be placing random buys and sells. But we need to be confirming these trades, or not confirming because nothing's 100%. But what I'm trying to say is, you follow all of your rules, all of your trading plan, and then if a setup presents itself, do not hesitate to take it. Because over time, even if you lose in the short term, you lose the short game, you will win the long battle, right? You lose the short game, meaning you lose 1 or 2 times in the short term. You turn around once you've reclaimed direction in the market, price is now bullish again, and then you see some sort of demand level down in here that's valid. You take it long now, and you get a risk to reward that's maybe like a 1 to 5 or a 1 to 10 that would totally outbeat a 1% loss and a 1% loss there. Then now you're net profitable in the long term. So think long term. Stop being so short-sighted, right? Short-sightedness leads to so many other psychological problems, which leads to blown accounts, over leveraging, just so many issues in your trading. Do not have instant gratification. Same thing goes with prop firm challenges, guys. I can't say this enough. If you guys are not profitable, why are you guys taking prop firm challenges? That just tells me that you guys don't know what you're doing. You guys are, instant gratificationers. You guys want to be making $1 million overnight. If you're not profitable now, what makes you think you're going to be profitable taking a challenge? You're probably not passing the challenges, right? So why are you taking them? I see so many people doing that. I just want you guys to do the right thing. I know I'm hard on you guys, but that's the only way that you are going to be profitable. My mentor is extremely hard on me, which is why I've grown to become this way. But I have transformed many traders into very successful traders, very profitable people who have quit their jobs before because of the consistency that they see long term with this strategy. But it requires your dedication, and it requires you to understand certain things about how these financial markets work and how trading works, investing works, and the whole numbers game. It's a process. It takes time. You got to do the little things right. So even the little things such as, if you're not profitable, don't take a challenge. Once you see 3 to 6 months of profitability, now you have a higher chance of passing the challenge instead of just wasting a couple of $100 on a challenge that you will possibly fail on. So hopefully you guys are taking this not as, not like I'm trying to come at you guys, but as constructive criticism in your own trading. Now, some of you may not be like this at all. Some of you may be, very well-versed traders who are following your trading plan, who are using good risk management. In that case, continue to do what you do. But deep down, some of you know who you are, those of you who are not following trading plans, who are over-leveraging on positions, who are just trying to get rich quick, who are not taking the time to learn, the strategy and gain experience, you guys know who you are. And you can, answer those questions for yourself. So if you're not seeing profitability, then you might want to think about changing some things up. Okay. So that's my spiel. Sorry. Just wanted to say that. I want you guys to be successful, which is why I'm hard on you guys. Okay. All right. I'm not going to sugarcoat anything. I'm not going to be the mentor to say, oh, you can do it. Just continue to do what you do. Da, da, da. That's not going to help you. You're only going to continue to be in the same rut you've been in. Right. I hate when people do that. Right, you got to get the facts, got to understand what you're doing right, doing wrong, work on the areas in which you're doing wrong, and let's make this stuff happen. You guys have the potential. You guys can do this. Let's make it happen. Okay. USD Chef, higher time frame, we're bullish. Okay, we're moving in the upside direction. We've come into a higher time frame level of supply. We have reacted from it. It's a little tricky because we have lower time frame setups that we could be looking to take short, because we can see here high, low, high, fail to make a higher high, lower low. We could be looking at shorting this if the dollar continues to weaken for possibly an overall retracement into higher time frame levels of 9.7 or 9.588 or 9.546. Somewhere in there could be a potential that we short into. However, if we continue with the lower time frame trend, we can see high, low, possibly a higher high. So where's the demand here? Well, equal lows were swept last week. Lower time frame, we have accumulated in price. You can see the accumulation schematic and the break of counter trend structure to the upside. That coming into a level of demand, filling imbalance. This is the high that created this low. This is the low that created this high up in here. So this is the high that created this low. We've come into our last point of return, this demand objective, this structure point, right? Higher high, higher low. Higher high, higher low. What do we expect now? Possibly a higher high. So we can be looking to long this. So we accumulated, we failed to make a lower low, higher high. That turns into demand. We can easily buy that from 9,920 from that level to go long up into, that would be our first take profit because we're looking to short here and hedge our positions. Overall take profit can probably be 1.02 for a higher high. Okay, maybe even higher. However, we have come into a higher time frame level. There is a possibility that we have a pullback back into 9.7. High, low for possibly a higher high, which I'll be looking to buy from 9.7 and buy from these two levels as well because we're still bullish. But the lower time frame is bearish. We are making lower lows and lower highs. So we could possibly come up into that level and short off. So that's why if we come down into our demand level, I'm looking to buy this, but at the same time hedge my position short just in case we do sell off. Why is this important? Because on the 30-minute time frame, we can see that we've made a high, a low, a high, a low, a high, a low, failed to make a higher high, lower low. And we failed to pull back into our supply. We created equal highs. So that buy side liquidity, we could look to target, buy to sell, take equal highs, and then mitigate this supply zone and go short. That's what we could see. This is the previous demand that we reacted from with this bullish candle, but failed to generate a higher high in this bullish sequence. We failed to do so. We turned around and that's sold off. So that flips from demand to supply. So that's what I'm looking to sell it from. So selling and buying at the same time. This is where we can be looking to hedge our positions. Okay, because the lower and higher time frames are not in alignment with one another, so it can really do either one. We just don't know if it's going to become bullish or bearish right now. So we can be doing both with the idea that, let's just say you shorted off from here, stops would go above the overall high. Okay. Take profit 9.7. That's a 1 to 3. That's still in my rule book. That still meets my rules. Great. If I lose that short position and I win this long position here, I am making 3.5%. 3.5 minus 1 is 2.5. I net profit. If I lose this buy here, let's say I come up into this level here, sells off, comes into this buy here, loses, comes all the way back down. 3.2 minus 1 is 2.2. I'm still net profitable. Okay, so it's just a game of probability, and I'm not confirming these trades, but I'm playing off of highly probable regions. Just because we're higher time frame bullish but lower time frame bearish doesn't mean I'm just going to place a buy and a sell and just hedge my positions randomly. I'm not just going to place a buy and a sell right there. I have my areas of interest. If you have multiple areas of interest in opposite directions of one another, you can hedge. You can. It's not a bad idea. NZD-CAD, same deal here. We have broken the counter trend structure, right? Lower lows, lower highs. Boom, 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 boom. We've made a higher high compared to that previous high. So now we're looking to go long. Now to continue with the structure, high, low, high, low, high. Could come into here or here for continuations, right? So this is the low that created this high. This is really what started the uptrend here. When we created this high, this is the high that formed. When we broke this high here, this is the high that formed. So this is the low that created this high. This is the range. That's the range. Okay. Actually, excuse me. This is the range. Sorry. This is the low that generated this high. This is the range here. So we can be looking for buys in that range. So we have two levels of demand. One in here, we have more imbalance, and then one in here. Everything else in here has been accounted for. So we're all good. These two levels, we'll look to buy it. Boom and boom. Now it is in the opposite direction as AUD-CAD because we already are in shorts from our higher time frame level of supply here. Why? Because we're still higher time frame bearish. We haven't broken structure like NZD-CAD. So lower low, lower high, lower low, lower high, lower low. Looking for a lower high for an overall lower low. We could easily see that. Target 8.5, higher time frame psychological level. Lower time frame, why is that supply? Why do we sell it here with stop loss above the high? Because in this situation, we see a high, a low, a high, a low. I just look for the counter trend. Where do we break the counter trend? That turns into the demand to supply flip, right? So this is demand right in here. We come into it, we react, failed to make a higher high, lower low, creates that supply level, which is exactly why we reacted from it, and now we're going short. So if we continue short, great. I'm in this trade. I'm making money. However, because we are counter trend bullish here, we are counter trend bullish, making higher highs and higher lows. Could we react off of our nearest demand level and go long, especially because we could be looking to long from NZD-CAD as well? That is a possibility. So we have to keep that in the back of our mind and potentially hedge our positions. So since we can do that, and just for that reason, I will be looking to hedge my position here at 86843 or 8685, whatever, round figure. But still keeping my shorts. If we go long, great. I win the buys. I lose the shorts. I'm still net profitable. If I lose the buys and win the shorts, because I'm still in profit here, I'm still going to be net positive. So we only look to hedge, again, when it's an appropriate level. This is an appropriate level because this is the higher time frame. Let me show you. Because NZD-CAD we're looking to buy, right? That's first and foremost. We're looking to buy NZD-CAD, so AUD-CAD would naturally probably follow that. We also have accumulated. We've accumulated in price. We have broken out here, right? Sold off, failed to make a lower low. So with the counter trend, this is the entire demand, but we can scale in here within the demand for lower time frames so we get a better risk reward. This would be our supply. We came up into that supply, we reacted, creating that triple doji formation, that red candle, and then we made a higher high. So that would act as our higher low. Higher high, higher low, higher high, higher low, higher high. Okay, that's what we're looking for. But we're also shorting because we're still higher time frame bearish. So you guys, you can see how I'm picking apart the market, higher and lower time frames, and finding these levels. I'm human. I still lose. I've been trading for over 5 years. I still lose trades. It happens. It's a part of the game. But the reason why I do so well is because I can articulate these things in my mind and understand, okay, I need to be looking to do different things in different situations, right? In this situation, since we are counter trend bullish and NZD-CAD is looking like it's going long because we're still making higher highs, higher lows in the lower time frame, and we've broken out higher time frame in comparison to this previous high. This high made this low, but this low made a higher high. So we're still looking to go long. And in that case, I need to be looking for counter trend buys. We have accumulated, we can go long, right? Accumulation, 1 drive, pullback, 2 drive, pullback, 3 drive into the high. 1 drive, 2 drive, 3. That's what we look for. Okay. But we're still higher time frame bearish. So in this situation, we would be hedging. If we were lower time frame, like something like this, guys, this is what I mean. If we were higher time frame bearish, and we went like we went like this, boom, 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 came into supply here, swept that, and then we broke the counter trend structure. Then lower time frame, we would be bearish as well within this higher time frame expansion. In that case, there would be no point of hedging because higher and lower time frames would be in conjunction with one another. But in this case, they're not, so we can be looking to hedge. 2 more very quickly, guys. I really don't have much on this at the moment. Higher time frame, we're still bearish. I'll go to the 2 hour to show you what I'm looking at. Lower low, lower high, low high, looking for a lower low. We have a lot of sell side liquidity, a lot of retail traders buying off this trend line, which will be destroyed at some point because retail always loses. So we've finally come up into our last swing point, which is that sponsor candle. Big buy to sell in the 2 hour, swept that liquidity there, came up further into our supply levels that filled this sell imbalance there. Okay, so we've come up into that level. We're in profit. However, we're still counter trend bullish. So there's a possibility that we might push up a little bit higher, maybe before shorting off. Because on the, I think it's like the 15 minute, I believe. I think I saw something here. I'm not quite sure if it is. Yeah, it is right here. Okay, so this was that last selling volume before the last buy volume that created the lower low. So this was that sponsored buy to sell. So this is why this turns to supply. That red candle turns to supply. So we could push up a little bit higher within this overall buy to sell. Oops, let me get into that. Within this overall buy to sell, this is just a lower time frame entry that you could have. We haven't come up into that, but we did come up into our original sell position from this level. And now we can see we're in profit, but we're still making counter trend highs and lows. So we may, have one more run before going short. Something like that could happen, right? So I'm not going to be selling from here just because I'm already in this position short. But if you wanted to sell this position here, you could if you're not already in shorts. Looking for overall sells. Okay, last one, Euro Chef. Actually, I don't have anything. Actually, yes, I do. And this is just really higher time frame, guys. I don't see anything lower time frame here as of right now. I mean, we could pick apart something later on as the week goes by, but we can see the higher time frame has been shifted. And we can just see that across the board, guys. We're starting to break counter trend structure on the lower time frames with these higher time frame retracements, which is why it just becomes tricky to trade the market sometimes. Lower low, lower high, lower low, higher high. Okay, so now we have shifted structure. Where are our most recent supply levels? Well, if we get an overall pullback, I would look to buy this. Supply or demand here and demand here, equal lows there. Sweep sell side liquidity if we have a deep pullback, and then we go long from these two levels. Okay, but currently on the lower time frame, we're still making higher highs, higher lows. So what if we just scale in? We can just scale in, right? And I would say probably, if we see something like, I don't know, I mean, I don't really see much in here. I don't see anything in here. We have a little bit of a demand here. There's demand right in there, especially with that candle there. So maybe if price, comes down into this level, breaks counter trend structure, boom, 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 like that, we can be looking for buys. Something like that. I have no idea. I'm not saying it's going to happen, but I would just be looking for institutional concepts to tell me to buy. If we're higher time frame bullish and in lower time frame bullish, I'm looking to buy this, right? So I would just wait, have patience. Let's just say we do something like this. Boom, 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 sell to buy. Sell side liquidity, run. Demand, mitigated, right? Counter trend structure, broken. Pullback, sponsored candle, buy. That's what I would look for. Obviously, it hasn't happened yet, and I don't know if it's going to happen. But if it does, we can take advantage of it because we know where we're headed and we're going long, right? So we can be trading in that direction. Until then, I don't see anything. And this, guys, please, this is not a trend. This is not a break of structure. Okay, that's not a break of structure. All right, we don't want to be doing that. All right, that's not a sponsored candle. Just because we broke a little tiny little mini trend doesn't mean we're going to pull back and go short. We're still overall bullish. Okay, we need to be looking for longs. Just see that. So whenever structure kind of tricks you like that, whenever the markets trick you into wanting you to take short positions, just zoom out. Where are we going? We're in a bullish market right now. I mean, heck, even if you didn't know that, we knew we broke the structure there, right? That's just easy market structure we broke, and we're still continuing to push higher, which is why it's sometimes tricky because you may see this type of trend, and you may think, oh, we broke structure. No, it's probably just like an overall pullback and just continuation like that. So don't get tricked out. Look at the higher time frame, trade in alongside that, wait for institutional concepts to form, sell to buy, whatever, sponsor candle, boom, like that. I don't know. Something like that, guys. You guys know what I'm talking about. You guys are smart enough to understand, what I'm trying to say here. Okay, so that is really everything that I have here. I hope you guys took some value from it. Do mark off these levels that we're talking about. Follow along as you start to see this stuff play out. If you already are my VIP, you will be getting updates on this daily. If you are not and are interested, head over to my website. I would love to talk to you about how we can help you reach your goals. Book a free call, aerialfxtrading.com. Book a free consultation. We'd love to just speak with you to see if this program is the right fit for you. We take you to A to Z wherever you are in your trading, helping to build upon your skills and help you to get funded to quit your job so you don't have to live that measly 9-to-5 life, so you can do something more meaningful and have a better financial life. All right. And even if it's just time freedom, we all want that. And I'm so glad in my 20s I'm able to have that. All right. So guys, have a great rest of your day, and we will talk to you all on next Smart Money Sundays. Take care.